Hello, everybody. Welcome to the second episode of the Crypto Convo. This is Liam Chase, your host, with my co-host Taiki. And today we have a super fun and exciting topic to talk about today, which is really our long-term goals and our exit strategy with crypto. Because I feel like everybody's using crypto as a vehicle to their final destination. So that's kind of what we want to talk about. And, our long-term, short-term, really just our objectives of being invested into crypto. So Taiki, if you want to start us off, and we'll go from there and have a good conversation.
Yeah, sure. I feel like when I first got into crypto, it was via Bitcoin, and I kind of understood Bitcoin, but I just saw it as like a way to like 10, 20x my money. I just didn't really believe in Bitcoin to begin with, but I just felt like, you know what, I'll just put some money in it and hopefully it'll grow. But as you invest in something and you have skin in the game and you learn more about Bitcoin and then teetering into ETH and DeFi, you start to really understand why it's so valuable and why there's value accrued to the space. So I guess my end goal is to earn passive income through crypto. I mean, the reason there's so much hype in decentralized finance is because the meme of the future of finance, right? And the future of finance is swapping tokens, lending and borrowing. And DeFi is so powerful because you can earn such a high APY through just Aave and other lending protocols. So ultimately, I do want, I guess for this year, it's to just find undervalued projects, see it go many multiples up. And at some point, I want to de-risk to fiat, stable coins, and start lending it out and earn 8 to 10% on Aave. Obviously, over time, as more money pours into the space, it's going to get diluted. But I think we're so early in the space that those rates are sustainable for now. And a lot of other people that I know, I tell them hey, you can earn double-digit APY on dollars. They're like, oh, it's gambling, I don't know. But I told them, no, you can earn that because people are actually lending, people are actually borrowing. It's a market rate,
a free market.
Yeah. So ultimately, I just want to learn more about the space, find opportunities, and earn passive income because we all work a job because we trade our time for money. But if you can achieve financial independence, then you can do whatever you want with it, right? So yeah, I mean, this is a pipe dream. Hopefully we get there. I mean, if tomorrow the market dumps 30%, then my goals will change. But given we're in the bull, the insane bull market, I can see this happening, and yeah, that's the ultimate goal. How about yours?
Yeah, so pretty similar situation. When I got started back in crypto in 2017, I just took a couple $100, couple $1,000. I threw it in. I saw it go up. I got scared. I FUD it out. Thankfully, I did. I turned I don't know, $1,000 into 2,000 on Bitcoin, buying a piece of a Bitcoin. And that's one thing I've even learned myself over the last year is that I realized I'm trying to make this quick money, but when I get the quick money, what am I going to do with it anyway? Because, I'm not somebody who is spending lavishly on, designer clothes, cars, things and like that. I definitely have a goal monetarily that I want to hit before I start doing anything like that. So watching just billionaire investors talk about why give yourself the dollar problem really put it into perspective for me as far as, okay, if I'm going to go into something, I need to have a long-term goal with it and really stick to it, right? Because the cash is useless, right? I mean, it might as well be in crypto if I don't have any immediate plans to do something better with it. And, learning what I've learned, crypto, I really do believe that it is the future of finance like you're talking about here. And so one thing for me, you mentioned if crypto crashed tomorrow, you would probably switch your goals. I'm actually, because I started accumulating, I feel 2020 and 2019 were probably some of the best times to be accumulating when everything was pretty much hitting lows, like Bitcoin, Ethereum, a lot of the main stuff. So I kind of missed that prime time accumulation phase, I feel like. which is why I have ventured off into some altcoins, that not so much of the blue chip stuff. Is just because I want to be able to catch some gains within the bull market, some 10x, 15, 20x's, which I've already seen a little bit of, which is pretty fun. But yeah, ultimately, my ultimate goal is to absolutely have that passive income so that I can walk away from my job and really do whatever I want. Like this, like I enjoy making content about crypto, talking about crypto, and just start traveling and doing more events around crypto, especially once this pandemic kind of lifts up and we could start meeting and doing in-person events again. That's definitely something that I look forward to as well. But, you know, with my philosophy, I've even accepted the fact that with me starting to accumulate a little bit later than probably ideal, that even if this bull market ended this week or tomorrow and I lost, you know, 60, 70, 80% of it, because I feel like I have so little skin in the game, I would literally just keep buying until the bull market. So I don't plan on cashing out big this bull market. I think the next bull market is going to be my big win, just because, like I said, I feel like I got in pretty late. I wasn't accumulating in 19 and 20 like I should have. Just very, very. I was accumulating, but not enough to where I am, what I'm doing right now, if that makes sense.
Yeah, and you say next bull market,
yeah,
because you expect like a crash and then another bull market, but
I know.
I mean, you never know if that's going to happen because
I'm with you.
I mean, the reason these there's always this meme about this 4-year cycle. It's like, oh, these boom and bust. But like the reason that happens was because people get really excited about crypto. And people
agree.
really think it's the future, and like prices go up because there's adoption, right? People buy it.
Yeah.
I mean, Bitcoin isn't just going up because it's like a fun game. It's like literally trillions, like over $1 trillion are like being put into Bitcoin. So I feel like everyone should always put in the back of their mind that this actually might be the last cycle. Obviously, like there's gonna be crashes, right? There's gonna be like some Ponzi coin that like 20x's then like dumps 90% because they're worthless. Majority of the coins are like worthless, and
100%.
And like you said, like you said something interesting where you said because you were later in the game, like accumulating crypto, like early this year, like you feel like you have to go higher, like more further out on the risk curve to like catch those gains. And I feel like that mentality, I think a lot of people have, and you could be handsomely rewarded. Like I think you got like an 18x on one of your assets, but also like if you go higher out in the risk curve, you are going to get wrecked. Like
definitely.
Yeah. So like I guess like I wasn't that early into accumulating crypto. Like I got in like Q3 of 2020 is like when I really started. But I mean, I have like a mix of assets, like mostly safer assets and like the blue chips, but I'm also speculating in like top 200 coins, top 300 coins.
Oh yeah.
That I consider to be safe.
And so I guess I am definitely accumulating blue chips. Like I've made Ethereum my biggest position. It wasn't my biggest position, and I intentionally
and
did
make it. Too.
Yeah. That's my second biggest position also.
Yeah.
So that's what I was acquiring Chainlink back in 2020, but and let me just say this. I was not accumulating as much of my cash to crypto as I am now. And the reason I continue to allocate as much cash as I am, because like you said, there may not be another bear market, right? This may turn into a super cycle that we never see these levels again. And I actually agree with you. I think if we hit a certain point, like I believe that we're definitely going to surpass 100,000 with Bitcoin. And so if we surpass 100,000, I think we'll probably hit the range of like 130,000. That's kind of the number that I like, and I feel like we could go to. But if you do the math, even with like a 60 to 80% pullback at 130,000, that's still like higher or about the same price that it is now. So, and I'm in this, I would probably say for long term. Like I've been contemplating with myself, and I've decided that with certain ones like Bitcoin, Ethereum, and a couple of the blue chips that I probably won't sell a majority of that. I'll probably only sell a small portion just because I definitely want to have my bag for the long-term adoption cycle, the 5 to 10 year route. And then I definitely have those, the shit coins that I'm going further out on the risk curve for the 15, 18Xs that I definitely plan on getting rid of all in sometime between the summer and the end of the year. I don't know. That's something that I'm figuring out myself. How about you?
Yeah, like with the blue chips like Bitcoin and ETH, like I know for sure that they're here to stay. I don't think anything can even get close to Bitcoin. Like Bitcoin is like money, like it's like the base money of crypto. Um, I think Bitcoin is like the only asset that everyone can like agree on to be like that'll be here in like 50 years, right?
Yeah.
The second closest being ETH because it's like obviously it's the largest, but ETH still has some risks, right? I mean, I'm like essentially all in ETH when it comes to like investing in DeFi assets
Right.
because I think the network effects are too strong. So I mean that's where the risk is. I think if you are worried about like a bear market, it makes sense to like sell like the micro caps and like add to Bitcoin because that's another strategy, right? Like if you're scared about a dump, then another strategy is like if you still want exposure to crypto and you don't want fiat, you can just sell your shitcoins and buy Bitcoin.
Yeah.
Because if Bitcoin like does dump 30%, right, then like ETH will probably dump 40, and then all your other shitcoins will dump 50 to 90%. So in terms of like your relative like performance, Bitcoin like will retain its value more. So yeah, I know you DM'd me like this once, but like you're starting to think about like how like not like how much fiat are you accumulating, but like how much Bitcoin you're accumulating.
Yeah.
Right. Yeah, and I think that's an important mindset because though like people think like, oh my god, like why would I own Bitcoin? It's max gain from here is like 3x. Like I'm gonna buy this shitcoin for like 20x. But I mean, if you compare it to like traditional assets like stocks, like a
Oh my
3x
gosh.
is insane. So yeah, I think for me, like having the majority of your assets in like Bitcoin, ETH, like whatever percent share you want, and when you feel spicy, just speculating on whatever you find interesting, that's always fine. But I would only invest in like lower cap altcoins if I really actually believe in it, right? Because like with you and PundiX, like you could only hold it through the 18x because you saw the use case and you're like, oh, this is actually being used, it's useful, and there's a use case for this. So you had strong hands, you had diamond hands.
Yeah.
But if you like put it into like some coin that your friend is into, then you're gonna like sell it at 2x and feel smart. But I mean, the reason you invest in altcoins is like for at least a 10x, right? So like,
Oh,
why are you selling
definitely.
something at a 2x? Like, what's the point? You're just taking on more risk for like limited returns at that point.
Yeah, it's funny when I see people selling their altcoins for 2x. It's like, that's all. If you wanted a 2x, you could have just bought a lot of other things, really, instead of taking all this risk. But if you want to talk about speculation, some speculating I've been doing some highly speculative yield farming on Binance Smart Chain.
Yeah, I know lots of people doing that. The power to them. I'm not going to participate in that.
I make sure to
eat.
Yeah, I make sure to keep it to like about 10% of my overall portfolio is what I have like exposed in the Binance Smart Chain, I'd say. That's a yield
I know
farming.
a lot of people making so much money on BSC. It's kind of insane, but I don't feel the FOMO. I'm like, it's okay. I'll miss out. I'll just focus on like what I understand.
No, I get it. And that's what I'm doing. I'm like, I understand like there could be rug pulls, admin keys, all that. So literally I'm like claiming my rewards and moving it into USDC every day just so I can keep track of, what I'm actually pulling out until I get my profit. My strategy would probably just to get my principal out as quickly as possible and then either let what I had initial deposited, let that ride and see if it continues generating income. And then maybe, move some of those gains or my principal back into mainstream blue chip, or maybe allocate some of it into the next Ponzi scheme. Cause a lot of these do feel like Ponzi schemes, I would say. What do you have to say about the Binance Smart Chain and a lot of the DeFi yield farming or the yield farming opportunities?
Yeah, I mean, BSC is just like a playground for smaller wallet investors to like try out DeFi, right? Because they can't use it. They can't use like Ethereum because like they get priced out with like $50, $100 transaction fees. But you can like basically do what you can do on ETH on BSC, and you can still make money because there's so much money flowing into the space. So I think BSC is good, and like new if you're like a new project on Ethereum that like you can't, it's hard to get traction. Like, you should just launch your project on Binance Smart Chain and like have users and like learn from there, like iterate. So yeah, me
Wh-
personally, like I don't, I feel like BSC BSC has no staying power in the long run.
Yeah.
Like because if Ethereum scales, then like there's no need for a Binance Smart Chain,
Yeah.
or like if Polkadot scales, then there's no need for a Binance Smart Chain because like none of the innovation is happening on Binance.
Oh, it's absolutely
Yeah,
not.
but like if you want to make a quick buck, then you should totally do it.
Do you feel
Yeah.
like yield farming? I mean, how much of your portfolio would you say you have yield farming? Like, are you lending out like 10, 20%? Like, do you feel that's has a place in the portfolio?
Yeah. I wouldn't. I don't want to just like think about like yield farming because I feel like yield farming implies like farming like useless governance tokens.
Right.
But there are like other ways to earn yield, such as like lending out Bitcoin, ETH, Chainlink on BlockFi. Like I earn 6% on my Bitcoin, 5.5% on my ETH and Link, and that's kind of like yield farming. I'm just like earning yield.
Oh, of
And
course.
yeah, I think one of the most important things you can do in DeFi is to, like just to earn yield. I think that's why DeFi is so powerful because if you buy like Apple stock, you can't earn any yield on that, right? You just like have to buy it and hold it. But on DeFi, you can like buy like a blue chip like either like Uniswap and like earn a yield on it. And if you think about owning an altcoin and getting a 10x, like what if the altcoin that 10x is earning you a 10% APY, right? I mean, that's
Hmm.
just going to only compound your gains. So most of my assets, I have it staked somewhere. Like with my Rook, I have it on Bancor. On my Bancor, I have it on Bancor, earning yield. And my Badger is staked on Badger, earning yield. I think because most of these coins, most crypto, they're like massively inflationary, right?
Yeah.
Because like they're just like yield farming. People are yield farming, and like there's so much supply being printed every single day. Where if you can't beat that, then you're just gonna get wrecked. Because we talk about fiat being devalued. Well, your shitcoin is most likely being devalued as well. So you might as well try to earn a yield on it. Obviously, there's risk, but I mean, yeah, like the compound interest also applies to like things that can go 11x, right? I mean, if you can earn 10% APY on something that like really goes orders of magnitude, then you're just making so much money.
And is that what's your long term? Are you in crypto for 5 to 10 years, like your lifetime?
Yeah,
What's
definitely. I do think crypto is the future of finance. It might not be. I mean, I can't predict the future. Like I don't think all of finance is going to be like on Ethereum and like DeFi. Like I'm sure like some niche use cases will like only thrive on DeFi, etc. But I mean, the reason I started my YouTube channel and make videos like 3 times a week is because I do believe in the space, and I do believe that as DeFi grows, I like my audience will grow, and I think I have a lot of knowledge I can share to the community that's valuable. Um, and like to go back on the passive income thing, like if this bull market continues and like this episode 2 of the Crypto Convo is not the ultimate top, then I'll keep appreciating my capital, my principal. Then at some point I'll de-risk, um, earn 10% APY on stable coins. Like that'll be my salary, right? Like I can have like some fiat earning me a salary, and then with the money like that's left over, I can learn about cryptos, yield farm, lend it out, speculate. I mean, there's so much you can do in DeFi that like DeFi is not just like finding altcoins that pump, right? It's just like
no?
it's like finding ways to make your assets work for you, right? And because DeFi is it's essentially like replacing the middleman to like give both the borrower and lender like better rates. I mean, you have to take advantage of the rates. Like if you have ETH sitting in your wallet that's not doing anything, then you fucked up, right? Like you should put it on something and like earn some like governance token, even if it's useless. Like it's like earning something, right? Like you should always put your assets to use. That's how I think about it. And yeah, long term, like I'll probably try to make a salary through DeFi and try to not get wrecked and rug pulled.
Yeah, no, I agree with you 100%. Because I mean, that's really the narrative of DeFi, is like becoming your own bank. I mean, it's just so amazing about, just, I was even talking about like, shoot, I mean, I know credit's important, but if you have hundreds of thousands, millions of dollars in crypto, you won't even need a credit score, because you can just borrow from yourself hundreds of thousands of dollars to purchase whatever you really like, and then just make payments back to yourself to repay your loan. And it can all be done without the middleman. And those loans, and that's why I'm so excited about the Latentry project. Did you ever check out the video or more into Latentry?
Yeah, I like Latentry as well. Do you want to go over it?
Yeah,
so
let's talk about it. I think it goes into DeFi and portfolios and stuff. So what did you end up learning? What did you like about Latentry?
I guess my general takeaway is like everything in crypto is over collateralized, right? Because I mean, there's no way to know like who you're lending money to. So like you best hope that they have enough money to like pay it back. But when you think about like the current financial system, like you don't have to like collateralize anything at all. You can just borrow like 10K from like a bank to like use for like a credit card, right? And if you don't pay it, then like they're gonna come knocking on your door and like they're gonna force it out of you. But under collateralized loans, I think is like one of the next big thing in DeFi. And I think Latentry is cool because it kind of helps you like make like apply credit scores to like wallets. I don't fully understand like the tech behind that, but if you're a whale and like you have like 500 mil in your wallet, and then most likely you're a low risk customer, so if you're a protocol, you're probably able to safely lend that person like
$1 million or $2 million.
Yeah, without any collateral, and like stuff like that. I think that's going to build more liquidity, because finance is all about like leverage and like debt, right? Like people borrow. I mean, that's like interest rates are 0% right now. It's like companies are just borrowing money out of the wazoo and like applying it to like their capex. So if DeFi can like make like liquidity more fluid, then like that's gonna accrue value everywhere. So whether it's Latentry or like some other project, I think it's really important. Like have your wallet be like a social score or credit score kind of thing. How do you interpret Latentry?
Yeah, it basically just allows these wallet users to be uniquely identified. I'm not a tech person, so I don't understand exactly how the tech works. And I actually sent it over to a developer of mine and said, check this out, tell me what you think. So I'm going to talk to him about it hopefully soon. But yeah, I think it really is it's going to it's going to get DeFi closer and closer to the same ground playing field as traditional finance or CeFi, right? Because it is going to start to open up. We have the loans with the over collateralization, which is cool. You literally can't do that anywhere else as far as having no third party intermediary. But once we're able to uniquely identify each wallet holder and build that pretty much the credit on the crypto without it being tied to your identity. So it has the pseudo anonymity of crypto, which is also a nice thing. So it was a concern for me as well, like how are they going to do this without exposing your privacy? But it's basically like, it's like my profile without my face to it or my name attached to it, right? And then another thing that I liked is that so what Latentry does, it's a decentralized identity, DID. So not only will it allow people to build credit scores within the crypto and DeFi landscape, take the under collateralized loans, but it's also going to help ensure the decentralization of governance and token and protocols as well, because there may be 5, 10, 20 wallets that are governing or the main governing of a certain protocol, but we don't know if it's, the same group of 5 people that own all the wallets, right? Because they could all set up different wallets. And I think you
Yeah.
did this with Uniswap, didn't you? You had multiple wallets that you received airdrops from.
Oh, I mean, I didn't receive airdrops, but I have 3 wallets on
Yeah.
like MetaMask, and I'm just using a bunch of protocols that have not airdropped yet.
Yeah.
So maybe in like a few months from now, they'll airdrop tokens to like 3 of my wallets, which is pretty cool. I'm speculating on future airdrops essentially.
Yeah. And so that's one problem. It's not necessarily, well, I don't know. You could speculate whether that's a problem or not. But in the future, regardless of the airdrops, they'll be able to confirm the decentralization of the governance, because every address is unique, right? It's not 3. They'll be able to identify that all 3 belong to you or whoever you are as the person, rather than 3 separate people with 3 separate wallets.
Yeah.
So I really think it's the next I don't even know what the next frontier, and it's just the next step for DeFi to really, like I said, get closer to an even playing field with traditional finance. Because I don't know, I think in our lifetime, what do you see happening with crypto in our lifetime? I know we don't have a crystal ball, but let's just have a little fun and imagine what could happen.
Yeah. I guess if I were to say this out loud last year, I probably would sound like a crazy Bitcoin maxi. But I do foresee a world where like central banks will hold Bitcoin instead of gold, and we'll be trading like paper money, like digital currencies that are backed by Bitcoin. So like I don't think we'll ever use Bitcoin to like buy food, right? I don't think Bitcoin is going to be a medium of exchange, but like maybe that like the Fed will hold 1 million Bitcoin, and like every Bitcoin or holds 1 million Bitcoin, and they issue currency backed by that Bitcoin. So it's like going back to the gold standard, but like literally the Bitcoin
standard.
Yeah, so I think I foresee that happening. I don't know if it's in my lifetime, but like who knows? Like there's like almost 60K Bitcoin. Like it's becoming more and more likely. But with DeFi, it's hard, right? Because I mean, there's like $40 billion like locked up in DeFi, which is like nothing. It's like tiny. It's just like right now DeFi is a casino, and it's impossible to like know what's gonna happen. But I do foresee like those DeFi blue chips like Aave. I think Aave can be a bank. I think Aave has a license to be a bank in Europe, so like they can start like making credit cards and like like literally be a bank like that. Like I can see that happening. Like those niche use cases like yield farming. I'm sure like 90% of like yield farming protocols will like go to zero.
Gone. Yeah.
Because it doesn't really add value. It's just like distributing tokens that like do nothing. But yeah, I think over time there's only going to be like on ETH or something like ETH, like layer 2 or whatever, or maybe layer 3, like so many layers to like make things scalable. There's going to be like 10 protocols like Aave, Uni, that like really allow like swapping, and like if Aave is a bank, then like why do you need JP Morgan, right, and stuff like that. And then
100%.
Tiny things like Latentry offering DID. Yeah, I think in like 100 years it's going to be like 100 big DeFi
protocols
and like 10,000 like speculative shit that like pumps 10%. So sorry, pumps 10x and like goes to zero. I don't know.
Yeah, I see it going that way. I hope that we get to a place where we have like mainstream DeFi, because I mean, at the end of the day, these protocols are basically like just another company, except for there's not a CEO. In some cases, I think there is, but in some cases, because it's decentralized, like it operates the same as anything else. It's just that there's no one person that can press the red button and stop everything from happening, like we saw recently with Wall Street. And I think I hope that DeFi displaces Wall Street and banking. And I mean, we can obviously see with like Aave, the open protocols and the open markets, like the reason you can earn a yield on your dollars in DeFi is because there's actually an open market, right? It's not manipulated by a centralized authority like the Fed, who are suppressing yield in the real world. I mean, they've created an economy where you're essentially forced to go into risk on assets to generate yield. I mean, back in like the 70s, even in the 2000s, late 90s, you could earn like 8 to 10% on like CDs and just your savings account all the way back in the 70s, right? But they've created this zero rate interest environment where you literally have to take on so much risk just to get a yield.
Just to
And
keep up.
yeah, literally. And you know, this is going into more into macroeconomics, and this is a reason I'm so bullish on crypto myself, is because if you look historically and statistically, right, the Federal Reserve, what they do is they lower interest rates in response to economic crisis. So if you look the last like 100 years, that's what they've done. Well, if you look at what's going on right now, it almost seems like they've backed themselves into a corner, right? We already have interest rates at zero, and by their definition, we're not in a recession. So the big question becomes, when we do actually go into a recession, what are they going to do? For me, there's three routes they could take, right? They could either go negative, which Jerome Powell, you know, he's already said he wants to avoid that as much as possible, and that would be unprecedented in America. But maybe we get a new Fed chair who thinks a little different. Maybe he's a little more liberal, right? And believes in the MMT, modern money theory. We could do that. We could go negative. We could jack up interest rates, which would absolutely destroy the economy. I mean, so many.
Yeah, that causes a recession.
Yeah. But it would be a healthy, right? Because that's the point of the recessions, is to really clean out like the shit coins. Like whenever that's what happens in bear markets, like shit coins and crypto, for example, they get cleaned out because they don't have a place in the crypto market, right? And so with the Fed, you know, dropping rates to zero and delaying this, you know, ultimately I think it's going to be bad. And if we go negative, it's going to be bad. If we raise interest rates, it's going to be bad. So those are the two traditional paths that they could take, right? Maybe they have other tools at their disposal. I don't know, but what I do know is that they're losing control of the bond yields. The bond yield spiked again this week. I don't know if you saw that.
The 30-year yield.
Exactly. And so I think the one thing, and this is where CBDCs and crypto and everything ties in, I think what they might do is flip to a central bank digital currency within the next 5 to 10 years. It really depends on how bad the next recession is, right? Because I mean, you know, you have folks like Raoul Paul, and I think he was saying, but I've heard some smart money people, like billionaires, saying like, look, this next recession might be as bad as the Depression, if not worse, which I don't know, you know. And I think something that we fail to realize, because I know we're young, but even people older than us, like in their 60s and 70s, like the system that we're in has only been around. So like the Fed system in America, right? It's only been around since 1913. In reality, that's only 108 years. Now, 108 years, that's like a couple generations as humans. But like in the grand scheme of things, 108 years in time is not that long, right?
And the gold standard was, we went off the gold standard in 1970. So MMT has been a 50-year experiment. So far, it's worked. I mean, printing money does support the economy, as like we've seen, like every time a recession happens, they print money, and like we go,
they lower interest rates, print money.
And it works. But at some point, the doomers think it's not going to work. We don't know. I mean, like if you go back to the 2008 financial crisis, people back then were saying, "Oh my God, we've never done this before. Like this is going to end so badly." And now 2020, like recession happened, print money, like economies like firing back up, right? And like everyone's like, "Oh my God, it's unprecedented. It's not gonna end well." But like 2040, we might do the same thing again, and we might be saying, "Oh,
I agree,
unprecedented." So like,
there's no telling when the cycle would end, if it does end.
Yeah,
for sure.
I think a lot of people just think the economy is gonna crash because like that's like a really easy narrative to sell.
Yeah,
and like if you like write out if you make a YouTube video or like a blog post about like, "Oh my God, the economy's gonna crash," and like you're probably gonna get clicks because it's like a sexy narrative. But I mean, MMT so far has worked in the past 50 years. There's no denying that. It does create wealth inequality, which is like pretty fucked up, and which is like why I buy Bitcoin.
But it's so like, crazy
Yeah.
Like how everything intertwines, like because crypto leads to the macro, which like you said, just leads to the social issues, and everything is so intertwined. And over the last 2 or 3 years, I've been like reading about this stuff. That's what I've come to realize. And that's the context I was talking about. Like, if you don't know about treasury yields and how that impacts the economy, if you don't know about how the Fed interest rates work, like if you don't know the traditional finance stuff, probably crypto won't make a whole lot of sense to you. You won't see it as a solution or an alternative, at least, to what some would say we have a problem with today. And that's what really excites me about crypto, is that it's just another piece of the conversation, another layer on top of all the traditional stuff, and possibly an alternative and maybe even a solution, which is what I'm praying it is.
Yeah. And the 30-year yield going up is like actually good for the economy because it means that the bond market expects inflation. And inflation only happens when the economy is like doing well. So sometimes like assets like stocks and like tech stocks and crypto sells off because like the yields go up, but that only happens because like people expect inflation. So it's actually a good sign for the economy that like, yields are ticking up. If you own like Tesla, you might not be happy, but like if you think about like where the economy will be like in the next 2 years, it just means that people expect it to be better off. I mean, it's logical. I mean, it's logical, right? I mean, vaccines work and like people are getting vaccinated. Like this personal savings rate has been at all-time highs. People want to like go around, move, like travel, spend money at restaurants. Like there probably will be an economic boom, right? Just like when things open up. But the problem is like at that point, like what is the fiat worth? And it's probably going to be worth so little, and people don't understand. So I can see a world where economy is doing well, yields are going up, and you would think that Bitcoin would hurt from that because like interest rates are like there's going to be less money printing, but it also means that like at that point like fiat would be debased so much that like Bitcoin might be at 6 figs at that point. There's no way to know. I mean, we all think Bitcoin's going to 6 figs. Like I'm pretty sure it's going to happen. Like, but there's nothing guaranteed. I mean, we need like another $1 trillion to get there. I mean, it's not gonna come out of thin air. I mean, it's gonna be hard. It'll be a hard grind to get to 6 figs, but yeah, it's always a dangerous game to like expect, like, because I think we all think Bitcoin is like coded to go to 6 figs, and
Definitely not.
I mean, yeah, I don't really see a world where Bitcoin doesn't go to 6 figs, but I know I feel like the market's too euphoric right now, right? I mean, Definitely. The reason we started this podcast was because we're so excited and we think it's the future, but
yeah,
like maybe that's the bubble. Maybe like episode 7 is like when the bubble pops and like we're just sad and we just like look back and be like, wow, like.
Well, I don't want to say, hey, like I don't want to stop this when the bubble pops, or if it is because like you said earlier, like you said earlier, what if this isn't a bubble? What if this just keeps? I mean, obviously, we're going to have natural, healthy pullbacks, right? With cycles. But if we never see another 60, 70, 80% crash, it's just, and maybe we're not even looking at the alternative. What if crypto, is it possible? There's a possibility that crypto just goes to zero all over the place, right? Maybe we're just.
I mean, like there's like black swan events, it's like out of nowhere Satoshi comes out and he's like, I'm like Joe Biden. It's like we're the government and like we fucked you guys, and like they like Satoshi rug pulls. I don't think it's gonna happen, but like it. I mean, I'm so bullish crypto. You don't even like, yeah. I mean, like I'm so bullish crypto, but you always have to consider like what ifs.
And so going back, I guess, to what I was saying before we got into the whole economic conversation about, DeFi and crypto just being an alternative to things like Wall Street, the banks, maybe even the Federal Reserve. I mean, do you see that as a possibility, or maybe not replacing them, but integrating, just improving the efficiency? Or do these banks can retain control over the moat and what they've built? Like, how does that play out? I mean, because obviously it's a threat. Like crypto is a threat to like nation states and to big corporations and banks. And Gary, this is what Gary Vee was saying. Like, he's like, if you think they're gonna let this happen, you're like, you're on like you're insane. If you think they're just gonna
there's no way. It's gonna be there's gonna be regulation coming. I don't know, next month, in 5 months, like who knows? But there's gonna be some regulation and there's gonna be some FUD, right? Because there's no way that the Fed and the banks are gonna like let Aave be the biggest bank in the U.S. or like some shit like that. There's no chance in hell.
No way they're gonna let the people like you and I actually make the yield rather than them, right?
Yeah, no chance. So what I could see happening is like some level of regulation where I always think about like this thing called DeFi, or like decentralized finance,
Right.
where banks will like use DeFi and like some aspects of DeFi, and like, for example, like if JP Morgan earns 8% on stable coins, they'll give their clients 2%, and like the clients are happy because it's like never before seen 2% on like dollars, but the bank like pockets like the difference,
Yeah.
and arb that difference. And yeah, I don't see a world where like there are no banks. I mean, it's going to be regulated. It's like there's no way to tell. The new SEC chair, like Gary Gensler,
Yeah.
he teaches blockchain, or he taught blockchain at MIT,
Right.
so he understands crypto. So I don't see him coming out and saying like, oh, Bitcoin's banned or like some crazy stuff like that. But there's no way that like the Fed and the government's gonna
just let it take over.
Control. Yeah, there's no chance.
Yeah,
I'm scared of that. I'm scared of like crazy regulation happening. Like if next week like there's like some crazy KYC like restrictions on like DeFi, then like everything's gonna go down 40% for sure.
Well, how would the government enforce KYC on DeFi? I mean, I don't know.
There's an easy way. Because all the fiat on ramps are from centralized exchanges like Coinbase, Binance.
Of course.
Because how else do you get like,
of course,
USDC, right? And obviously, like we can meet in person, and I can hand you 10K, and you can give me like 10K worth of ETH, but like that doesn't scale. There's no way DeFi. Not. So there's always going to be a centralized on ramp. So the government can be like, all right, like Coinbase, you can only send money to MetaMask wallets if you KYC like each individual wallet, and that's gonna be a pain in the ass. So like
they'd have to have KYC on the Meta. Well, wouldn't MetaMask have to implement the KYC if that's the receiving wallet?
Or it's more like Coinbase has. So like we all KYC via Coinbase, right?
Yeah, we're already KYC'd on Coinbase.
Yeah, but like I don't think Coinbase like really tracks like if I send money to like a wallet, right? They're not gonna like track like, oh, this Taiki wallet is like he made 10K in profit, so I need to report to the IRS that they're not doing that, right?
Oh man!
But like they can easily like log a record and like use some software to track all my swaps and like tax me and like restrict me from using certain apps, or like restrict how much money I withdraw. Because I think with Coinbase, if I deposit money, there's like a 5-day withdrawal period, right? But maybe like the government says DeFi is too dangerous, you can only withdraw $5,000 a month, then like the TVL is not going to grow, and like DeFi might, I don't know if it'll die, but like, you know,
it'll be slowed down.
Yeah, and it's going to tank. Like if there's like some like unfriendly regulation, everything's going to tank. Like even if Ethereum becomes $1 trillion asset in like 10 years, short-term FUD is going to strike and everything's going to dip 30%. And maybe like,
oh, for sure,
it's good to have cash on the sidelines to always like prepare for that. I don't have enough cash. Like I'm like pretty much fully invested.
Hey, that's what I was doing today. I had to go sell some assets that weren't appreciating to get cash to buy maybe some crypto, or just have some cash ready if we do see a nice 20 or 30% pullback. Yeah, that's a really interesting thought process as far as, monitoring, because if you really ultimately think about it, because we are KYC through a centralized organization, they can literally just track our wallet address and see if they really wanted to every single thing that we do, even if we're going between like 4 or 5 wallets. We're buying it on Coinbase, sending it to an offshore exchange, non-American, and then sending it to like Ethereum or BSC, and then locking it into our smart contract, and then giving a dividend or yield and moving that into USDC. And technically, Yeah, we don't do tax advice here, but that's also something else I was thinking about. Like, I guess with the tax part, every time you do a swap, if there's a monetary gain, that's taxable, huh?
Yeah, it's short-term capital gains. My goal is to try to have all my assets be long-term capital gains. Like I think with Bitcoin and ETH, like this thing, like any asset that I have in BlockFi, I'm gonna hold for at least a year. Just so like, because I forget the short-term capital gains rate. I think it's like 30% or like whatever your income level is.
Yeah.
But long-term is 15. So like even if something dumps 20%, like I'm still making that the delta in savings via like long-term capital gains. So
And do you plan on continuing acquiring for like how long do you plan? Are you acquiring now or are you holding off? Like, do you plan
oh
on
yeah,
acquiring long term?
oh yeah, I bought a lot yesterday. I bought some Keeper DAO. I bought some Bancor. I bought Parsec. At some point, I'm gonna stop accumulating, and it's weird because like when Bitcoin was at let's say like 20K, right? I was like, you know what? Like, I'm not gonna buy any more Bitcoin under 20K or over 20K because like I accumulate all my Bitcoin and like it's too high risk now. But
Yeah.
like then I bought Bitcoin at 30K. I bought more at 34K and like 45K, and I just keep like extending higher and like farther out into the risk curve. So that's the danger, right? Because I feel like in 2020 we had this like predefined strategy, like no more buying until here.
Yeah.
But now we're so bullish that we're just like saying, okay, I'll keep buying
I
until
think
X.
it's the what if. I think that's the what if this never pulls back to the levels that we've seen. Because I mean, I don't believe we're gonna see Bitcoin under like 20 or 15K again. Do you?
No, only like under a black swan scenario of like crazy regulate. Like if US bans Bitcoin, it's gonna go to like 10K or something. Or if like Satoshi like sells half his coins, it's gonna like go to 10K or like some crazy shit like that. It's unlikely, but it's possible.
Yeah.
That's why I'm earning yield on my Bitcoin. So like even if that does happen, then at least I'm making some extra. Some extra. I'll be wrecked though. Like I think everyone will be wrecked at that point, but unlikely.
Yeah. And by the way, because we're talking, I know, there's a lot of talk about regulation coming to crypto. What have you read any ideas of what type of regulation or proposed regulation, or is it just like a thought, an idea that the government has, or do they have anything substantial that they're kind of talking about already as far as
Uh,
regulation?
yeah, I don't know, but I know like back in October, or no, I think December, like after Biden won the election, Steven Mnuchin, like the former Treasury Secretary, like
Yeah.
I mean, he knew he's gonna be fired, right? He has to step down, so he like tried to pass like this crypto AMC KYL like bill,
Mm-hmm.
where I think I forget what it was, but I think it was like if anyone is sending, so if Coinbase, if you use Coinbase and you want to withdraw like at
Mm-hmm.
least $3,000, you have to KYC that wallet, and like really it's just like something similar to like what we just talked about, but
Right, with
just
the MetaMask.
yeah. So I think that's like really simple, right?
Yeah.
I think they can totally do that because
Yeah.
if you have a wallet address, like it's a public blockchain. Like literally every record of like what you did within that wallet is on Ethereum and it's
Mm-hmm.
transparent. So the government or some company can like come up with software that like tracks everything, and then they'll tax you, and like that's fine. Um, I think the reason the government doesn't like DeFi is that like tax is like weird. It's like if you make 100K like using DeFi, then like they can't track you, right? So like I think usually governments they're open to innovation as long as like people pay their taxes.
Right.
Because like the U.S. like when the internet boom happened, like they could have easily said like, oh, the internet is disruptive to government, so like we're gonna ban internet. No, like they were like, okay, like we'll let American internet companies thrive, and like now America is the powerhouse because of all like Apple, Facebook, Google, Amazon.
Absolutely.
So
And it's
I'm pretty
definitely,
bullish on I'm pretty bullish on regulation. I think they'll be friendly relatively.
yeah, I think it's as much as it's against, I guess, maybe the core philosophy of Bitcoin, right? I think it's good overall because it will help mass adoption and actually, keep in the long term adoption cycle.
Yeah.
Like, and going back to even like the banks and stuff, or I think I sent you that report about Aave. There's some bank I think in Europe that's like going to be integrating or working on Aave. So I think what we're going to see is, because there's always going to be people, especially with the generations that are alive now, who just don't want to deal with the wallets, right? They don't want to deal with a MetaMask. They don't want to set it up, their seed phrase. They don't want all that responsibility. They just want somebody that will basically do it on their behalf. They'll make 2, 3, 4%, and then whoever is helping in whatever institution makes the other half, or the arbitrage there. And so I think that will always be that's always going to be a business model, because even with the people that we know, our age, not all of them, like how many people do you know that are actually getting involved in like working in DeFi themselves, outside of yourself and like just your general crypto friends, like your non-crypto friends are in it? Or I guess they would be crypto friends if they were doing that, but I think you understand what I'm trying to ask you.
Yeah. I have like two friends that like do DeFi. But yeah, I mean, whenever I talk about crypto, I mean, like, I think Bitcoin is in its own category. It's just like an investable asset at this point, and everything DeFi is like something new, right? And I have two of my friends that like are open to like this new decentralized finance, and they're both working in the finance industry. But anyone that's like, all my other friends, like they just think crypto is a scam, right? They just think it's something that like people gamble on, which is true. I mean, like you're gambling on some coins. That's probably not going to exist in 10 years, and so am I. But the crypto is so new that people don't really understand like what's being built, and like Aave becoming like a bank is like,
Dude,
it's
that's
beautiful.
what I was wondering. I wish we could have a world. I don't know. Maybe this is a little too fanatical, but yeah, like banks just feel so outdated and clunky.
Yeah, because I heard this quote where, like, because I mean, internet's the future, right? I mean, it already is like everything, but like
Yeah.
still, like everything is like AI is also like technically the internet, like the IoT Internet of Things. And I heard this quote, like internet has caught up with everything, right? Like commerce, like e-commerce and like retail, like even like Uber, right? Like transportation. But the one thing that hasn't caught up is like finance, because we
And
still use
government.
banks. Yeah. So I think, I mean, this is speculation, but I think internet will catch up to finance through DeFi, but slowly. Right? It's not going to happen overnight. And then over time, like as people are like you and I, like we're very internet native. Like right now, like the boomers in office are like not
Oh yeah.
internet native. So when they die and
As
like
they
we
phase out.
replace them,
Yeah.
as they phase out, then like we're gonna like implement like all these like software to like
To
make things better.
replace, like, it would is Wall Street, if you really is Wall Street even really necessary?
Not really. Like Wall Street's just a way for like rich people to like
It's
maintain their
just a
wealth, right?
middleman. They could all be replaced, and banks could be replaced with protocols. Parts of government could even be replaced with protocols. I mean, it's just,
Blockchain voting, that should be a thing. Like, why are people
yeah,
counting votes manually? They should just do blockchain voting.
right. So, and that ties into like the DID thing. Like, if we can uniquely verify everybody and make sure everybody who qualifies gets a blockchain vote, like, yeah, and that's the thing that's, yeah, us young. I guess we're like what are we considered, Zoomers or millennials? I don't know. I think well, I think we're right on the cusp, aren't we?
Yeah, I think we're in between.
We're like right on the cusp because we're both like 23, 24. That's like the last year of the millennial, first year of the Zoomers, I think. But yeah, everything as far as the government, they always move slow. So I think once the boomers, and maybe, there's what's after them, the Gen Xers, or
No,
yeah,
it's
it's the
boomers, millennials, then actually I don't know.
no, it's boomers, Gen Xers, millennials, and then Zoomers,
Gen
and
Z?
then
Okay.
and then the next generation after us, which is whatever, like Alpha or something. But yeah, as
Yeah.
the boomers and the Gen X's phase out, because have literally been born and live in a world of technology since our pretty much earliest memory. And I think that's why it's so easy for us, like us young folks, to make that transition to crypto. And we have a lot of faith in the internet, just because yeah, I can understand, like, when boomers are skeptical of crypto, I can understand that to a degree, right? Because they were born in an era where there wasn't even internet. And so if they never made that transition to the internet, then it's going to be a lot harder for them to transition to crypto, because that's like two steps. But when I see young people that were born in the technology era, I'm like, how's this a hard transition for you? I mean, this is literally you every day. Like, this is your life. um, but yeah, I think that's my long term. This whole episode is speculation, of course. But yeah, I think long term, like Wall Street, there's really no place for Wall Street. There's banks just feel old and clunky. I think banks will exist. They just won't exist in the same way they do now. They'll just do things on
They'll be
behalf of
less
people.
powerful.
Yeah, they'll be less powerful. They won't be the ones keeping all the coins. They'll just be helping assist people with their coins. You know what I mean?
Yeah.
And then even parts of government because I still think, like DeFi is like a year old, like really, and smart contract blockchains are like, less than 10 years old. So I think there still have to a lot of innovation to make sure that these are one day secure to the point where we can entrust like entire banking systems, where we don't have to worry about hacks and rug pulls. Mainly the hacks, I would say. That's probably the biggest long-term exposure. But once we get to the point where we can trust, and there's always third-party counter exposure, even with centralized institutions, right? Like we just had the Fed's whole entire system go down a couple weeks ago.
Yeah.
So I mean, there's always going to be some level of third-party or risk, right? But I just, how far do you think we are until we can? I mean, I guess we are seeing it now. There's 40 billion locked up, so that's a lot of people trusting in protocols that could be hacked, right?
I can rug pull.
Yeah, it could be rug pulled, but I think, like, it's a small number, but still 40 billion, that's a lot for retail users like you and I to be using and trusting in this system. So I think one day in like 10, 20, 30 years, however long it takes in our lifetime, to where we just use smart contracts like we use Facebook and Amazon now, like, I think that's what it'll just be another layer. Like, you know what I'm saying? It's just going to be a layer that businesses are on top of and just integrate into everything we do. And we won't even have to talk about like the blockchain or the protocol, just like we don't talk about the internet or how the internet works. 'Cause I don't really know how the internet works, but it does. Do you?
Yeah. No, and you don't have to. And
right.
it's like there's always like the smart contract risk, right? And like getting hacked or like whatever. But I make a connection to like, I'm sure like when the internet first became a thing and like e-commerce was trying to like build out.
Yeah.
I'm sure people like were so scared to put like their credit card info on like websites.
Oh yeah.
Right. It's like, oh my God, like what if they get hacked? But obviously like now we know that's like pretty secure. Like we trust the companies and like
because we have the SSL certificates now.
Yeah. And like
revolution.
We use like, and I use my credit card like everywhere. And like I don't really think about like, oh, like what if this gets hacked? But like I think that's going to be like with smart contract risk. So like the audits will get better and like things like Aave has like 5 billion locked and it's never been like hacked or anything. Like some of these protocols, like they'll like the longer something like remains, like it's called a Lindy effect. Like if Aave gets like 100 billion with like 0 hacks, then like at that point, like how can you not trust Aave? And like over time, trust will grow and the fear, the FUD will end. But yeah, I mean, yeah, it's good to think about the risks, right? Because like if people aren't using DeFi because they're scared, then like people in DeFi are incentivized to like audit more and like create more content to like show how unrisky like these protocols are. So it just takes time, and I think there's gonna be like I think if ETH like starts to like 10x from here, or like 5x's, then like at that point it might be a bubble, right? Because ETH is like still young. If it's like $1 trillion asset, then like maybe it's too early for ETH to be valued a bit. Like Bitcoin will eat gold, ETH will eat like a lot of value from the banks. I think it's inevitable. Like bank stocks are like not doing so well right now.
Yeah.
And
It's
like,
just a paradigm shift. I think that's
like,
going to happen
like
in our lifetime.
Square and PayPal, like they're fintech companies that are like essentially trying to be banks.
Mm-hmm.
This shift is happening, and crypto is part of it. And there's
Yeah.
a reason PayPal and Square both are like very crypto friendly because they understand what's happening, and they're trying to
They're trying to
destroy JP Morgan, and
they're
like
trying to get on the good side of people like you and I who will run this country in the next 20 and 30 years.
yeah, because like why do you need a JP Morgan account if like I use Venmo and Square? Like there's no point.
That's what I posted about. Like, I'm excited and I hope that happens in my lifetime one day. Like, with banks are so clunky. Like, I literally get paid and I get cash fiat and I just transfer it to like crypto anyway. So it's like, why doesn't it Coinbase or Voyager or any of these or even wallets like MetaMask? Like, when are we going to be able to just on a direct deposit, like, oh, here's my wallet address, just send it to my wallet, just send it in stable coins like of my choice, USDC,
Yeah.
whatever, like that would be a pretty exciting time if that ever happens in my lifetime, where we just don't need the banks. Just send it to my wallet. I'll allocate it how I want. And then especially when like Visa, because isn't a Visa is adopting USDC. So
Yeah. Through Circle.
so I mean, as soon, and that's really the big thing, is that when I think Visa will be a big bridge to mainstream adoption, even if people don't realize that. I think that's when people don't, that's really when the integration happens, is when people aren't even conscious of that they're using it, right? So like with Visa, the bridge, like allowing all these retailers accept USDC. Like, we would probably keep our cash that we don't want to spend or invest in USDC, but the problem is we have to convert it back to fiat before we spend it, right? So if Visa starts allowing all these retail businesses, and we can just spend USDC, or let's not forget the central bank digital currency. I doubt it's going to be integratable with the Ethereum blockchain or any smart contract blockchain. I hope it is. That way we don't have to have like a Fed wallet and like our crypto wallet, and it can just all be one. That would be pretty exciting. But yeah, that's like, I'm in it for the long run, and I think I'm going to keep accumulating because, like I said, I've already accepted the fact that I've started accumulating late if there is another 60 to 70 80% drop. But then I also think about the other possibility. What if there's only like a 30 or 40 50% drop and we don't even really notice it? So I plan to just keep on accumulating for like probably 3 to 5 years, maybe even longer. Like, I mean, because think about it, the generations before us, they would just accumulate everything in the stock market and not live on it, not generate any yield. Like, we're going to have the best version of what they had. Like, we're going to be able to just store away money and get paid on it while we wait to need it. Like, we might never even need to access it if our portfolio gets big enough and we're earning 9, 8, 9, 10, 12% yield on it every year. You can do whatever we want.
That's the important thing with the yield. There's like, let's say there's a 40% drop, right, in the next 12 months. If you're earning yield on that, then like, you're not actually losing 40%, right? Like, I can't do the math in my head, but like, like if you're bullish like assets that you think will be around in the next few years, you should accumulate them and earn a yield.
And something that I think, and it even took me to realize, is when you get paid, like, you don't get paid in dollars, you get paid in the crypto.
Yeah, depending on what you use.
Yeah.
Like, if you're yield farming, then like you just get paid in like governance token that has value. But if you use Aave, then you get paid in stable coins.
Yeah. And yeah, so it really depends on what exactly, because there's a lot of ways to generate yield, whether through lending, staking, so there's a lot of options. But if an asset appreciates and you're getting paid in that token, like, that's even better. You're getting even better yield, kind of, to a degree.
Yeah. So, because I think I haven't been keeping track of time, but I think we're like around an hour apart. hour mark.
Yeah, I think
What
we
are your,
are too.
yeah, what are your final thoughts?
Final thoughts.
Yeah.
Fonk the bonks. That's my final thoughts.
I don't like I hate like opening my bank app. I mean, I feel like why do I even use this? Like my debit card is connected to it, but like
That's
I
about
wish
it.
I don't have to do. Yeah, I guess for me, sorry to interrupt, but like my final thought is, yeah, just try to earn a yield, like compound interest. You know, we learn about it, but it also applies to crypto. It's not just like catching random pumps. You know, catch random pumps with a yield. Like
That's the best.
it's even better. And yeah, like because we're both bullish crypto and like the future of the space, like just you have to spend time to like research, right? Like
Of
you might
course.
not make any money in the first 100 hours of studying the space, but if you think about how early you are, and you know, if you like are aware about DeFi, then like that might open up future opportunities for you.
Mm-hmm.
So that's the way I think about it. I'm just like when I spend so much time like researching and making videos, I'm like making $0, but I'm betting that maybe like 12 months from now, like all my videos and all my research would be worth a lot to like
Somebody,
the community and somebody where, you know, I can earn passive income and like add value to like people and like,
yeah,
I guess like to spread the message of Funk the Bonks. Yeah.
right.
But that's the goal of my channel.
Yeah, exactly. And that's my vision. I don't think it's going to happen. Like, I think over the course of my lifetime, in our lifetime, you know, over the next 20, 30, maybe even 40 years, we'll just see the mass integration and we'll see the decentralization of power, because that's, you know, that's what these DeFi does. Is it, instead of all this revenue and profit going to institutions, like centralized institutions, and I get that they, you know, they have shareholders, which sometimes it gets distributed to the shareholders. In most cases, not. But it just, you know, DeFi just allows every person to, and especially once Ethereum gets their gas fees down, it's going to allow every person to have a piece of the pie and like earn dividends on just having assets and participating in the community in general, which is something that doesn't happen now. Right. So it's so weird. And even when you talk about the like political philosophies of crypto, it's really interesting conversation as well. But yeah, I think in 20, 30, 40 years, we'll get to the point where people don't talk about crypto because it's just so integrated into what we do in blockchains and smart contracts that it's just, oh, I'm going to use Facebook, which is, or I'm going to, you know, I'm going to borrow from Aave. Like that's just normal. Right. And I think if we get to a world like that in my lifetime, it would be very satisfying. And knowing that I'm I mean, like I said, DeFi is really only less than a year old, right? Or maybe 2 years old, right? So we're still so early, and there's a lot of trials and tribulations that we're going to go through. But that's, you know, the rewards that we're going to reap if it is successful are going to be very, very, very massive, because we're obviously willing to take that risk so early and put faith into a future that we believe in.
Yeah. All right. Want to wrap it up?
Yeah, so hopefully you got some bright ideas from this conversation. We talked a little, this was mainly a speculation talk, just having fun, dreaming about what crypto and blockchains could do one day, and a little bit about our portfolio goals. I think what we can take away from this is the blue chips we're probably going to be holding long term, 3, 5, 10 years. And then, you know, with altcoins, we're probably going to be just holding for the medium term bear bull cycles. So with that being said, hey, thanks so much for tuning in to another episode of the Crypto Convo, where we just talk about crypto stuff for normies. And until then, hodl on.